What if I told you that investing is the key to financial freedom? Imagine having money that works for you 24/7, growing even while you sleep. But where do you start? How do you avoid losing money? And what are the best strategies for beginners in 2025? In this video, I'm going to break down everything you need to know about investing as a beginner. We'll cover how investing works, the best strategies for 2025, common mistakes to avoid, and the exact steps you should take to start today. By the end of this video, you'll have a step-by-step roadmap to building wealth through investing. So, if you've ever felt intimidated by the idea of investing or thought I'll start later, then stick with me because I'm going to show you how to get started today, even with a small amount of money. Why investing matters. Let's start with a simple question. Why should you invest? Can't you just save money in a bank and be fine? The truth is, saving alone won't make you wealthy. The average savings account gives you less than 1% interest, while inflation grows at 3 to 5% per year. This means your money is actually losing value over time. Think about this. If you had $10,000 in a bank account 20 years ago, it could buy a lot more than it can today. A gallon of gas was under $2, groceries were cheaper, and rent was significantly lower. That's because inflation erodes the purchasing power of your money. This is why the wealthy don't just save, they invest. Investing allows your money to grow at a much faster rate than inflation, meaning your wealth increases over time instead of shrinking. Let me ask you something. If you could choose between earning money only when you work or earning money even when you sleep, which would you choose? That's exactly what investing does. It makes your money work for you. How investing works. The power of compounding. Now let's talk about the magic behind investing. Compound interest. Albert Einstein once called compound interest the eighth wonder of the world because of how powerful it is. Let's break it down with an example. If you invest $1,000 in the stock market with an average 8% return per year, after 1 year, you'd have $1,080. But in year 2, instead of earning 8% on just $1,000, you earn 8% on $1,080. The following year, you earn on an even bigger amount, and this process continues to accelerate. Now imagine doing this for 10, 20, or 30 years. If you just saved $10,000 in a bank earning 1% interest, you'd have about $12,000 after 20 years. But if you invested it and earned an average 8% return, you could have over $46,000. This is why the biggest regret investors have is not starting sooner. The earlier you invest, the more time your money has to grow. If you're watching this thinking, I wish I had started 5 years ago, the best time to start was then, but the second best time is today. Types of investments for beginners. So, where should you invest your money? There are 3 main categories of investments: low risk, medium risk, and high risk. Low risk investments are safer but provide lower returns. These include index funds and ETFs, which are a diversified way to invest in the stock market with minimal risk. Bonds are another option, providing fixed income returns. High-yield savings accounts and CDs are good for emergency funds, but not great for long-term growth. Medium-risk investments have a bit more risk but offer better returns. These include dividend stocks, which pay you cash regularly. REITs, or real estate investment trusts, allow you to invest in real estate without buying property. Peer-to-peer lending is another option, where you earn interest by lending money to others. High-risk investments have the highest potential returns, but come with greater risk. This includes individual stocks, where you pick companies you believe in. Cryptocurrency is another example, extremely volatile but with high reward potential. Lastly, investing in startups or private equity can be lucrative but also risky. Which type of investor are you? Drop a comment below and let me know. Best investment strategies for 2025. Now, let's talk about specific strategies you can use to start investing successfully in 2025. The first strategy is dollar cost averaging, DCA. This is one of the safest ways to invest. Instead of trying to time the market, you invest a fixed amount of money regularly, whether the market is up or down. For example, if you invest $100 every month, sometimes you'll buy when prices are high, sometimes when prices are low, but over time, your cost evens out. This reduces risk and helps you build wealth steadily. The second strategy is to invest in index funds and ETFs. Most professional investors can't even beat the market consistently. Instead of picking individual stocks, Invest in index funds like the S&P 500, which tracks the biggest companies in the US. Historically, the S&P 500 has returned an average of 8–10% per year. By simply investing in an index fund, you're already ahead of most investors. Another great approach is the 60-20-20 rule for portfolio allocation. A simple way to structure your portfolio is 60% in stocks, such as index funds, ETFs, and dividend stocks, 20% in bonds for stability, 20% in alternative investments like crypto or real estate. This balance helps you grow your wealth while managing risk. Common mistakes beginners make. Before you start investing, avoid these common mistakes. First, trying to time the market. Even experts can't do it consistently. Instead of waiting for the perfect moment, just invest regularly and stick to your strategy. Second, investing without a plan. Set clear goals for why you're investing. Are you saving for retirement, house, financial independence? Having a plan will keep you focused. Third, not diversifying. Don't put all your money in one stock. Spread it out to lower risk. If one investment fails, your portfolio won't collapse. Lastly, ignoring fees. Some brokers and funds charge high fees that eat into your profits. Always look for low-cost options to maximize your returns. Step-by-step guide to start investing today. If you're ready to start investing, here's exactly what to do next. First, open a brokerage account. Platforms like Fidelity, Vanguard, and Robinhood make it easy to start. Next, set a monthly investment budget. Even if you can only invest $50 per month, consistency is key. Then, choose beginner-friendly investments like index funds, ETFs, or dividend stocks. These offer steady growth and lower risk. Use dollar-cost averaging, meaning you invest regularly, no matter the market conditions. This removes the stress of timing the market and helps you stay disciplined. Finally, stay consistent and avoid emotional decisions. Investing is a long-term game. Don't panic when the market drops. Instead, stay focused on your long-term goals. Investing is not about getting rich overnight. It's a long-term game that rewards patience and consistency. Start small, stay consistent, and let time do the work. If you found this content helpful, we invite you to subscribe to our channel for more insightful videos on investing and finance. Check out this next video right here.